Once again, we're all welcome to the training tonight. We'll be looking at complete analysis of a trade, or what we call top down analysis. And it is a very important analysis in trading. You will always need it forever. Very important. And that is the careful evaluation and study of price movements, candlesticks, support, and resistance, as well as chart pattern of an asset before you enter a trade. And this is done using all time frames, especially from M5, or what you can call it from lowest time frame, M5, M1 to monthly time frames. And so it involves looking at the asset through all time frames, M1 to monthly time frame. So before a trader starts complete analysis of a trade, he or she must put his or her trading plan in place for disciplined and focused trading session. Very important. So what are the components of your trading plan? It entails the asset to trade. So you must be able to know, okay, this is the asset I want to trade. So you don't trade just all the assets. To be a successful trader, if it's only one you want to trade in a year, it's okay. There's no need for jumping from one trade to another. Study that asset very well properly. Know the in and out. That's how to trade. I don't trade all the assets. So I just have some selected assets that I have studied. Then that's what I do. So then, when a trader wants, when do you want to trade it? So you should know your trading plan should feature that. When do you want to trade it? Lot size to use. You must determine the lot size. Then you must determine how much minimum and maximum profit for the trade. So if it's $10 you want to make, once you are done, get out. Don't need to wait till 1,000. That's not you won't become disciplined that way. Yeah, the money is always there. The opportunities are always there, so you can come back some other time. But most times greed will not allow us to do that. So we should have determined that. Professionals determine how much, and once they are done, they are done. Minimum or maximum. Then your stop loss and take profit estimates. When do you want to take it? Your stop loss, you should know where to put it. And the maximum loss he or she can accommodate in the trade. We have talked about this several times. Maximum loss. How much are you willing to risk before placing the trade? Then always ask yourself this question: is fundamental analysis affecting the trade? So before you take the trade as well, you must be aware of the fundamental analysis. So you must have checked your forex factory before you place any trade. Before you place any trade, that's the first thing. Go to the forex factory and check if there are news affecting that asset. If there are no news, then you are good to go. You can now focus on technical. That has given you direction. So once you know that there's no news, then you go straight to the technical analysis. So for the top-down analysis, like we said, it is analyzing an asset holistically. You are starting from the monthly time frame, then you come to the 4 hour, you come to 1 hour, you come to 30 minutes, 15 minutes, 5 minutes, and then 1 minute. So that's how you do that. So you look at the asset via H1 to D1 to determine the trend. So H1 to D1, that's when you determine the trend depending on what you are trading. So to determine the trend of the asset, uptrend, downtrend, so you can check from D1. So look at what is happening on the daily time frame. What happened? Is the market in an uptrend? Look at H4. Is the market in an uptrend or downtrend? Look at H1. So you are able to determine the trend of the assets. And once the trend is established, then draw your static horizontal support and resistance. You can now draw the line. Okay, this is the support, this is the resistance, and then you draw your trend lines as well and take note of the dynamic support and resistance. We'll get to the chart. I will show you how to do that. Then after drawing the lines, you now look for where the price movement is, the current support, the current resistance. If is it close to resistance, is it close to support, or far away. So you should be able to know if it's close to support. Then what do? You buy, or you wait for a retest before you enter a buy. If it's close to support, I mean to resistance, what do? You sell, or you wait for a breakout and then retest. So it's as simple as that. It's as simple as that. So we go into the yes. Okay, let's quickly look at this now. After doing complete analysis for an asset, you zoom into the various time frames for deeper analysis and entry depending on the type of trade you want to execute. For a position trade, this is what you need. You analyze from monthly time frame to weekly and then to daily. Those are position if you want to be a position trader. For a swing trading, you analyze from daily to 4 hour, then to 1 hour, and then take your trade from 15 minutes. So you take your trade from 15 minutes for swing trade. Then for short-term trading, so such as scalping, such as you can look at 4 hour, between 4 hour, 1 hour, 15 minutes, and then 5 minutes to execute your trade. Then we have day trading as well. Scalpers also use this as well. So between day trading, as a day trader, you operate from 1 hour to 15 minutes, 5 minutes, and then 1 minute as well. But basically, you use 1 hour to analyze your market, and then you can now use 15 minutes as your entry. So that is very important. You don't need this crash and boom. You don't need it. It's not forex, so it's authentic indices. So it's not forex. It's not part of forex. So it's another thing. But
before you go further, sir,
okay.
there is one YouTube video I watched, and they said at the beginning of a session, if you compare like the 4 hour
time frame
trade with the 1 hour, you can determine the trend. The trend of you confirm, you use 1 hour to 4 hours to determine the trend. They use 1 hour to confirm.
Yes.
So I did that with my demo. This thing, the thing after 4 hours, the thing went back up. It retraced.
So the general principle is this. The general principle is just look at what is happening on a monthly time frame or on anything. All these are just a normal protocol, but always look at what is happening in the month. So if the month is bearish, definitely all you should be thinking of is take sell position, no matter what, whether you are a scalper, whether you are, do you understand? So all you are thinking is to look for a sell position. But in between, when you now come to a lower time frame, definitely when you're on a lower time frame, the sell position may not manifest. You may be buying at that time, So, but when it starts selling, then you can now take your trade. So that's how to approach it. So you don't necessarily need to wait for 4 hours to wait, but just look at what is happening in the week, what is happening in the month. So it will help you, to be able, you already know the direction. For instance, now look at what is happening. Now we'll go to the chart quickly now so that we can give focus to our teaching. So now let me quickly okay, now look at this now. This is Euro USD. Look at Euro USD now. If you go to the monthly, let's look at monthly time frame. What's happening? Is it buying or selling? The monthly time frame. What can you see here? You can see the bullish candle, isn't it? Hello? Are we together, please?
Yes, I can see it.
You can see
yes.
You can see it's bullish. So definitely that's why you see Euro USD, even though we are selling because we are day trader, you see it's buying. You understand? That's why it's buying. So most times, normally it's supposed to sell because we are day trader. You don't see that the buyers are the buyers are just trying to come in up. They just come up, and show up, pushing the market because the monthly time frame, because we are close to the end of the month. You understand? Today, tomorrow, now. So that's why the manifestation of buy is coming up. So even though it's going to sell heavily, it's still going to sell heavily. But because we are closer to the month end, That's why you see, like today now, we say you should buy, we should sell. See, it started buying, which is today now. Don't be surprised; it will sell massively. Don't be surprised. Do you understand? So because the monthly time frame now, if you look at the last one, the last candle was bearish. So definitely it's giving you a signal. You look at the last month, what happened last month? It sold. So definitely, no matter what it's doing now, you should be looking for selling opportunity. But at the beginning of the month, it started buying. So it could be a fake out. So don't be trapped. Look at last month, it sold. So just focus on selling. That's all. Forget about the buying is buying, but if let it get to anything, just look for sell opportunity. That's all. Because the monthly time frame told you it was bearish last month. Are we together? Are we getting it?
Sir, Pastor, it's getting confused.
No, it's not. It's not getting confused. Look at the monthly time frame. Last month it was bearish. This month now it now started buying.
Yes, sir.
So now last month
Yes.
you should have used last month as a judge, as a parameter. Do you understand? That should be. That's why we say. Oh,
So
this.
does that mean the candlestick for the last month will be what we should follow this month?
You have already
But
seen.
if as we are not on training, if I'm to look at this candlestick now, how we assume throughout this month, I will be buying because the candlestick is bully.
Yes.
That is if.
So that is a wrong way to approach it because you have seen last month. It's price action. You have seen what happened last month, and you see the way the candle. This candle is selling is going to sell. You understand? So, but because of fundamentals, all this is a fake out. It's fundamental that is just coming up. Are you getting what I'm saying? Because of fundamentals. So it's because of fundamental. It's not real technical. It's fundamental. Jerome Powell on Friday came up, said a lot of things. So market moved up. So that's not normal market. So you understand? It's fundamentals, a lot of, and when fundamentals comes in, it overrides the technical. So you now after the fundamental, everything will now cool down and follow the normal trend, and that's what is happening. You understand? So if you now go to 4 hours now, let's go to 4 hours. What is happening now? So you can see now, is this bullish or bearish? It's bearish. Even though it's buy, it's bearish. You can see it's bearish. You don't need anybody to tell you that this market will sell. It's just doing all the, because you have seen that bullish something, there will be confusion. You understand what I'm saying? That distraction is there. But you have already seen last month, you have seen that candle that was formed. You understand? So, and what made the candle to be like that is because of the fundamental that came up. Look at daily now. Look at yesterday. What happened yesterday? See the way it sold massively. And today has not even recovered half. And this is retracement. So when you see a candle today now forming, it is retracing and it has started selling now. So don't be surprised now. This thing will sell massively today. Even as we are talking now, any something you just sell. Do you understand? Or tomorrow, between today and tomorrow, you just see the thing sell. You see as it has to pull back. You understand? Where the is confirmed, even on 4 hour time frame, is already confirmed. Look at the higher, the lower high. See the way the market is going down. You understand? So it has been going down. So check your 1 hour time frame. So you see now, you understand? So what happened? The market was selling before the fundamental. See, market was on the sell. Look at this. This is head and shoulder. Market was going down before fundamental on Friday now came and push it. So see the way the fundamental, just one statement from the Fed chairman. You understand? Push. See this candle. So this is not normal. This is retracement. So it has retraced. So what do? You start selling back. Do you understand now? A lot of people now like that's why I said we should sell it since morning. So normally, once you just leave it, it will sell. You understand? It's a sell trade. It's not. We have established that because last month it looks bearish, and that candle that formed tells you that this is massive sell. It's going to be massive sell. But the distraction came up. Fundamentals started coming in. So somebody who doesn't know what he's doing, it's bullish. Yes, no, that's not. You look at past price action. What happened last month? For instance, now before you decide today, what happened yesterday? What happened yesterday? Market sold. How did this candle now? See the way it ended. So look at 4 hour. You understand? So you now look at all those things to compare, to make a comparison of how to analyze. So you start from monthly time frame to 5 minutes. Then if you now want to enter now, you can now enter If you're a scalper, you use 1 minute. You understand? 5 minutes. So depending on where it is. Now, for instance, are we going to be selling from here now? Is at support. You should have sold from here, from the top, which is resistance. Do you understand what I'm saying? Even though you can still wait for it to break this support now, this line, this current trend, let it break. Once it break now, follow it. That's your sell. It has been established. So this will not become resistance again. It's no longer support. The market is currently on 5 minutes as support.
Pastor.
Yes.
Pastor, sir. Yeah. Sorry. At that point, at what level of the candlestick will you conclude that?
We are not looking at candlestick. I don't want to. Don't look at candle. You don't even need candlestick. Just look. I want you to take it as that. I don't want you to complicate yourself. You don't even need all that. This thing is simple. Just looking at it, mere looking. I want you to be neutral now, as if you don't know anything. Don't confuse yourself. You don't even need candlestick in all these things. You don't need it. That's why this thing is simple. Just look at it as is. The moment it breaks this now, so all you now need is after breaking it, if you can find a red candle, you don't need to talk about candlesticks. Is there a bearish candle? And once you see red, it's sell. So I just want you to make it neutral so that you understand. You don't give yourself problem. Candlestick, you don't need it at all. Forex is not difficult. If what you are seeing now, everybody now with your eyes, you can see the market is selling, isn't it? So don't be looking for.
Selling, but the question I'm asking, sir, because based on what you said, the moment the support is breaking, then you can continue to sell.
Yes.
But I've based on what I've tested, I've realized after when I assume that okay, this level has been broken, then it go off back.
No,
that's why I'm asking.
It's not. It's wrong. You didn't do your analysis well. You understand? Like I told you now. Maybe you saw the monthly time frame. Was it not last month? Was it not bearish candle? But it's bullish today now. But you could have assumed it's bullish. So that shows the wrong analysis. Last month was bearish. So you keep to your bearish pattern. Forget about all this distraction. So you have to be confident. What have you seen? I've seen last month bearish. Forget it's bear. Forget about all those distractions he's buying. Do you understand what I'm saying? So you be confident about what you are saying.
Sir, if you are scalping, are we to follow the same strategy?
Yes, if you are scalping, that's what I'm saying. Did you see red candle? If you see, for instance, now this 1 minute, are you going to sell now? This is green coming up. So the moment you start seeing 1, 2, 3 red, what do? You sell. 1, 2, 3, 4. Do you look at this now? Look at all this red. This is not sell. If you have entered from here, you close it now. By now. So are you getting what I'm saying now? You are seeing red. What is that? Sell. So here now, if I say sell now, you see green. You are not supposed to sell. You have to wait for it to turn to red. That's why I don't want you to confuse yourself with this candle, this structure. You don't need it. This is simple. Even somebody, a child, you just tell the child, oh, this is green or this.
But sir, in a situation where it turns red,
yes,
comes low and it traces back.
So this is where confidence comes from. From your higher time frame, what is happening? It's raining. It has been raining since last month. So that is the mindset you should carry. Forget about the season you are seeing now. That it will continue to rain because we are in a rainy season. Forget that you just see dryness now. Forget that one is distraction. That's why you must be confident. Do you understand what I'm saying? So with that mindset, all you are looking for, even in the smaller something, is sell. That's what you are looking for. So because now market will test your confidence. You say it's retracing back. It's because you don't want to lose money. That's why you say it's retracing back. You understand? So because the moment it started, traders don't do like that now. How much I want to risk $10,000? That's how they trade. Not that I don't want to lose money. You can't trade like that. Too. That's not trading.
Because me, I would lie to you. Once you start retracing, me, I always pull out.
That's what I'm saying. Have you seen me close? Have you seen me use stop loss? I don't use stop loss because I am confident. Have you seen me? It's you that I don't use stop loss. No matter how, even as the market is, I've not used stop loss since morning. It has gone to some negative. It's there. I'm not bothered. That's market. That's somebody who understand market. I'm not bothered because I know the market. I know is it not selling now? So that's it. Me, I'm confident. If you like, let me buy. That's his problem. I'm not bothered. I'm not buying. That's it. I'm in the trade since I'm in it, so I didn't bother. If you like, let's say enter $1,000. It won't bother me for anything. It will come back and take profit. That's trade. So you have to be confident and not like you understand something that you are sure of. That's it. It's not just assumption. Hey, it moved. I lost $1. That's how to trade. That's not. It isn't. So you should have. That's why the book. Go and read that outline. How much are you willing to risk? Be confident. Follow it. Just know the direction of the market. What is happening? You understand? You have seen the big picture. Are you getting it? And then you follow it. So that's it. Forget about whatever is happening, whatever you are seeing now. Look at the 15 minutes now. Let's look at 15 minutes now. Is it not? This is an indication. This is what? A bearish market, isn't it? But it's at the support now. So you can see the green candle. You can't sell now. So allow another red candle to break this support. Once the red candle breaks it and keeps breaking it, then you now enter your sell. 30 minutes again. Look at what is happening now. Another green candle. You see the last candle. That's what you should always make reference to. Just like we saw the monthly time frame. The last one was doji. This is indecision. So you shouldn't enter such a market. So you just wait. Another green candle is coming up now. So allow this candle to finish for me. You understand? If this candle turns red now, allow another candle to start red again, then you enter. To be sure. So, it will help you a lot. Don't be distracted with the names. All those things, they are just confusing themselves. You don't even need that to be profitable. Just make it simple. That's it. Make it simple. That's how it works. You understand?
Thank you, sir.
So please go and read that material because I'll be rounding up now again, and then we'll still continue. We are not in it, so we'll still do it over again so that until we get it. Because that's why I'm taking my time. You understand? These things, if I want to teach you now, my assignment is just 1 week training. That's all. But I'm taking it one after the other because I know people can't get it that 1 week. You understand? And the stress is on me. Normally,
can you quickly do a revision of what we did in the last class about the opening time frame or
okay, yeah, the monthly time frame now. This is the monthly time frame now. You see now.
No. What we did in the last class that you said.
Okay, yes.
Tapping within.
Okay, that is a London session. When the London session opens, and the market opens and the trading session, the market will open from 7 and then the session will start by 8:30. You understand? So as at that time, from 8:30 now, you now begin to see breakouts. Market will be ranging, maybe from 5, 6, any market that is ranging as at that time. When it get to 8:30, it will just break out either to the up or to the downside. So if you break out to the upside, then you follow it to the upside. If you break out to the downside, then you follow it to sell. It will continue to sell. That's the direction for the day. It will create that direction for the day, especially for Euro USD, GDP USD. You understand? Because that's London session. Are you getting it? So it will.
That is for day.
Yeah.
For daytime frames.
Yes.